How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I am continuing the crypto series. This is part 14 of that series, and I'm trying to bring everybody just kind of an update on the crypto industry. You know, what's happening right now? What are kind of the big things going on at the particular moment? So I'm going to share with you two articles from the Wall Street Journal. But before we do that, I want to share just some industry news, like what's going on here. So the SEC says certain tokenization efforts not covered by Crypto Accounting Bulletin. So Security Exchange Commissioner Chief Accountant Paul Munter delivered remarks clarifying Staff Accounting Bulletin 121, which called for entities responsible for safeguarding crypto assets to present a liability on their balance sheets to reflect that obligation. So shared observations from recent accounting consultants in which Office of the Chief Accountant staff have not objected to a bank holding company's conclusion that its arrangement was not within the scope of SAB 121, said his office has not objected to an entity's conclusion that its use of distributed ledger technology to track holdings and transfers of traditional financial assets in tokenized form was not within the scope of SAB 121. So a tokenized deposit is a digital representation of a bank deposit with programmable capabilities. New York Fed Innovation Center is serving as an observer for Project Agora, a large industry experiment to test whether tokenized deposits can improve cross-border payments. So just some kind of interesting there from an accounting perspective on what's happening around like tokenization. The FBI, crypto fraud complaints rise 45% in 2023. So the FBI's Internet Crime Complaint Center said it received more than 69,000 complaints from the public regarding financial fraud involving the use of cryptocurrency in 2023. And this came from the IC3 report on crypto. Estimated losses with a nexus to cryptocurrency totaled more than $5.6 billion, an increase of 45% from 2022. While the number of crypto-related complaints represents 10% of the total number of financial fraud complaints, the losses associated with these complaints accounts for almost 50% of total losses. People aged 60 and above had the most complaints and highest losses. Almost all losses attributed to investment scams, also known as pig butchering, which I have covered in other episodes of this crypto series. And then Treasury sanctions North Korean digital asset money laundering operation. The Treasury Department sanctioned two individuals and one entity involved in a network that launders millions of dollars in illicit funds generated by North Korean cybercriminals to finance unlawful weapons of mass destruction and ballistic missile programs. Let's see here. A couple individuals worked to facilitate a money laundering and cryptocurrency conversion services that funneled illicit proceeds back to Pyongyang. If I apologize if I'm not saying that right. Green Alpine Trading LLC has served as a key component of the money laundering network. Earlier this year, the United Nations Security Council reported that North Korea stole at least $3 billion from crypto-related entities between 2017 and 2023. So just some crypto happenings around the world. So we got sanctions on North Korean companies for doing illicit deals. We got the FBI saying the crypto fraud complaints have gone way up, and that mainly it's older people, 60 and older. And then we've got the SEC continues to work on all this, tokenization efforts covered within, crypto accounting bulletins and stuff like that. And then we also got this Project Agora, which is being worked on by the New York Fed Innovation Center. So, so it's just some industry news. So let's get into a couple of these articles here real quick. So first one's called, and there are some really good charts in this. So this was called Behind Bitcoin's Rally is a Simple Fact. Supplies are limited. Bulls argue that the token's scarcity will fuel rising prices with buyers scrambling to acquire the last new coins to come online. So, and then this is a really good chart here. So Bitcoin supply since its creation. So you can see about, 2008 here around, or January 2009. And you could see that the vast majority of Bitcoins have basically leading all the way up to November of 2024, 19.789 million coins have already been mined. And the limit is what, 20.99 million coins. So limit. So there's basically 25 million coins, limit here at 21 million. So, and we're already up to about 19.7 million. So the vast majority of Bitcoin has already been mined. I think this is fascinating. And then you get into this whole thing about the halving, of this. Bitcoin investors celebrated last year after the price of the world's largest cryptocurrency hit 100,000 for the first time. Believers say the rally will continue because a key technical feature of Bitcoin, there is a limit to the number of Bitcoins that can ever be created. The computer code behind Bitcoin imposes a hard cap of 21 million Bitcoins. So far, about 19.8 million Bitcoins have been created, and it will take more than a century to create the rest, a process that will become increasingly more difficult over time. Proponents of Bitcoin argue that its scarcity will fuel rising prices as buyers scramble to acquire the last new coins to come online or to buy existing coins from people fortunate enough to own Bitcoin already. It is the same argument for buying Gutenberg Bibles, limited edition baseball cards, and beachfront real estate. There is a finite supply. Skeptics counter that Bitcoin has no intrinsic value and that a wave of selling could wipe out its recent gains. Bitcoin has been hugely volatile over its short history, alternating between feverish rallies and spectacular crashes. It plunged nearly 80% from its peak in 2021 to its low point the next year after the collapse of FTX crypto exchange. However, it is really worth, or whatever it is really worth, Bitcoin is a wild technical experiment unlike any the world has ever seen. An internet-based currency created by tech enthusiasts without the backing of a government or central bank. So this is all true. And then going down here, I just want to see here, go into this next thing. So this is the estimated distribution of the Bitcoin supply. So who has the Bitcoin? So it's basically almost 70% is with individuals. Satoshi has 4.6%. Businesses have 3.9%. Funds, ETFs have 5.9%. You have about 7.5%, which is lost Bitcoin. And you have governments have 1.5% of it. Other entities have about 1%, 0.9%. And then to be mined remains about 5.8%. So again, great little chart here kind of showing who owns Bitcoin out there right now. So, and then let's see here, number of Bitcoins held by select entities. So this is another interesting chart. So you could see here, about 1 million is owned, 1.2 million owned by ETFs and funds. The government right now has about 0.524 million coins. Private companies have about 0.410 million coins. And then the public companies have 0.512 million coins. So again, just some very interesting. That's why I love this article. Just some really good, interesting charts here in this. And then finally, I wanted to take a look at here just the crypto industry. This article here basically says, crypto industry hopes Trump can finally get them bank accounts. Crypto venture capitalists and founders look to the incoming administration and a new pressure campaign to repair relationships with big banks. The crypto industry is hoping for a fresh start with the banking industry. Many banks backed away from crypto companies and their founders after the catastrophic blowups of FTX and other crypto firms in 2022. Two banks that had been serving the industry collapsed, and crypto founders struggled to find new ones willing to take their deposits or lend to them. Banking regulators issued warnings, and then a string of suits against crypto companies such as Coinbase, Kraken, and Binance hammered home the message to stay away. So Donald Trump's election win has spurred a rally in cryptocurrency prices and enthusiasm. Trump's pledge to create a national Bitcoin stockpile and a form of council to set regulatory policy. Founders and others inside the crypto industry are hoping for a new regulators who champion crypto assets at banks and a change to the policy that urges banks to consider a client's reputation. So basically, they've got this pressure campaign here, congressional interest. And basically that's where it rests up. So, but I want to share with everybody one other thing here before I kind of comment on this whole thing. So I want to get into, Digital assets may cause instability in traditional finance. So, trouble in the digital asset realm could cause material instability in the traditional finance system, according to the Office of Financial Research, or OFR. In its annual report, OFR noted that vulnerabilities associated with digital assets depend on the strength of connections between them and the traditional financial system. OFR also said a significant drop in crypto assets price may cause individuals to exit their investments, impairing the tradability of the crypto asset, which may cause what resembles a bank run. Vulnerabilities associated with stablecoins remain elevated because issuers of the dominant stablecoins continue to invest some reserves in volatile assets. More on stablecoins. Assistant Treasury Secretary for International Finance, Brett Neiman, this week said that stablecoins are structurally vulnerable to runs, which can pose risks to consumers and investors and to financial stability. The Financial Stability Board recently reiterated calls for countries to regulate stablecoins due to concerns about users losing confidence in them, which could lead to runs. In addition, Treasury notes risks in cross-border payments. If a poorly designed cross-border payments system were widely adopted, it could do significant harm to international financial stability and economic security, according to a senior Treasury Department officials. So, stablecoin risks. So again, Neiman also said that stablecoins, often described as showing promise in facilitating cross-border transactions, are structurally vulnerable to runs, which can pose risks to consumers and investors to financial stability. So I have covered here in this crypto series the reality that, cryptocurrency is very volatile, and we've already seen from the collapse of what they call the crypto winter in 2022, with the collapse of all those firms, which led right into the banking crisis in the spring of 2023, and led to the failure of Silicon Valley Bank and Signature Bank, the two crypto banks that were basically embedded with a lot of this stuff. And we really haven't gotten the financial regulation that has been promised for years on this topic. So, I am just very, very leery of this. My recommendation would be for banks to stay away from the crypto industry, stay away from it until there is more regulation around it, until we know that we can be more secure in a lot of this stuff. We need to just make sure that we're not doing this stuff just because it's cool or it's popular or the crypto bros want us to get more in bed with this, because I think it would be highly dangerous for the banking industry to do this. So and as you guys might be able to hear, one of my cats is trying to give input on this. Here Cooper. So Cooper here is trying to give some input here on the crypto industry. Cooper, you want to say hi? What are your thoughts on the crypto industry, Cooper? Okay, so no. All right, so she thinks no. So with that suggestion from my cat, I will wrap up this episode by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, and make sure to check out some of the other episodes on the channel. Check out some of the other episodes in the crypto series itself. And remember, tomorrow night, Saturday night, the BND Strategy Room live stream will be live on YouTube and maybe Rumble. I'm trying to make that happen at 8 p.m. So please be sure to check that out. So with that, I bid everybody a fond farewell, and I'll see everybody again real